because B1000 wanted me to explain why we had a buy yesterday when initially we didn't have a bias. So if you look at the daily charts or the daily candles, I want you to pay attention to this candle here. Okay, so we're trading below the 13 EMA. That's the first thing. But I want you to bear in mind that we are still within the range. This range, I think this candle is from when today's Friday, Thursday, Wednesday, Tuesday, Monday. The candlestick from Sunday, we are still trading within that range. So if you're following my lessons or our live trading sessions, I'm sure you heard me say until we get out of this range, we really do not have a direction here. Prices literally are ranging. So how do you trade a ranging market? If you're trading a ranging market, you want to locate the highs from the wick to the body. Then you want to locate the lows from the wicks to the body. Then within that range, you look for buys on this bottom and you look for sells on this high part. Then after that, what will potentially happen is at some point price will then break out. So breakout happens like this: either it's a break and a retest and a continuation up, or price will just fake out, then come back within that range and still drop to the downside. Same applies on the bottom side. Either we'll have a break and a retest and price will continue pushing down. In this case, price will be coming into this level which we have near the 50 EMA, this zone here. That's where price will be coming. Or price will simply fake out, then come back into the range and most likely come back to the top side. That's how you trade a ranging market. If you do not know how to trade a ranging market or how to identify a ranging market, please read the Candlestick Trading Bible or go through the videos which we did on that book. That will help you, because remember, we've got a trending market where we've got higher highs, higher lows, pushing up. That's an uptrend. We've got a trending market where we've got lower highs, lower lows, whereby it's a downtrend. Then we've got a market where price is hitting the same levels, where the price is ranging. Then we've got a market where price is just choppy. It's almost like a ranging market, but the zones will be unidentifiable. You won't be able to identify them. So one same applies to this setup we had on B1. We didn't have a bias. So on a no bias day, here's the trick. If you want to take trades on a no bias day, H1 is to be your best time frame. That's number one. Number two, you should start looking for buys each time when your daily candle turns green. If it turns red or black, depending on the color of your sell candles, you can look for sells. So this candle was bearish, right? Let me use that black. This candle was bearish at some point. I think during the Zoom, we're actually pushing down and we did not have any buying bias. But at some point, this candle price pushed up and the price turned, the candlestick turned green. Soon as you see it turning green, you want to confirm with H1 whether you have an intraday uptrend for that particular time. That's what you will be wanting to confirm. So now, if you look at H1, you can see this price action here. There was no way we were going to use this price action. But check this pin bar here, taking out these lows here. So you see all these lows here, which are equal. Then there's that one candle, which sticks out. Spikes below, price starts to push up, and we get our first close above the 13 EMA right there. This is where we start getting interested in the setup. So after this price then gave a deeper retracement, they never took out the low. If you're studying BTMM or Beat the Market Makers method, you hear Steve say, pay attention to the low of the day, pay attention to the high of the day. So if price spikes a low and they don't take it out, just know they're going to go the other way. That's how you come up with your bias if it's a no bias day. Then after this, price came back above, closed above the 13 EMA. So now if you jump to M15, you find something like this. So the candlestick with the wick was this one on H1. That's the first sign which shows us that we're pushing up, right? Even though price comes and gets held here, we have that bias that potentially we could go up, although we are not yet active in this trade. Why are we not active? Because we still need more confluence. You don't just buy without confluence. So here you will notice I had this order block and I had this order block. Price came and they broke both levels. So I couldn't buy, right? Price came back up. You see this move here. This is where we got interested in the buys now. We're like, okay, now price will most likely come up because now we've broken structure. We're back above this order block and we're above a new order block. And within that range or within that impulsive move, we had this order block as well. That right there is a setup. So in terms of risk to a reward, if your price comes back into the order block, TDI is now trading above the yellow baseline. That shows you that also for that particular time or for that time frame, price will give a short-term trend. So if you notice, my TP was even right here, right on the moving average, because I was basing my setup off the current day's high and the previous day's level, which this dashed line which you see right there. So I was like, okay, if this price is gonna come up, and let's say they want to continue pushing down, at least they should get here. So what happened is they bounced off here. Stop loss goes right below the order block just to keep it tight. So the risk to reward was not that bad on this trade, depending with where you entered. If you waited for a candlestick to close, you could have entered here or here. But wherever you entered, this was a 20 pip stop loss. The reward was about 40 pips. So this was about a 1:2. I think I also mentioned, I'm not sure if I mentioned, but I think I did. It was a 1:2 risk to reward. But what ended up happening is price actually pushed up and exceeded it. But if you had aimed for your 40 pips, then you could have taken your 40 pips. So I hope you answered because they had asked me to explain my reason for taking buys on B500. So that was the reason. Then if you notice, price then broke the target and actually retested. This was actually the previous day's high. They actually broke it and retested for a continuation up. Then from here, price started pushing down. So again, today we are still in that range which you're talking about. The range from Sunday, the last Sunday, we still caught up in that range. So if we're going to buy, it's the same thing. Just wait for your price to come back above the 13 EMA. If you notice, I already put a line where I'm anticipating buys. If price does come above this line, you see, it will actually be above the 13 EMA at that point. Then I might look for a slight retracement and I might look for something like this, targeting this high or targeting Sunday's high. You can see this is Sunday's high, this is Sunday's low. So we've been trading within that range for the past 5 days. You get it. So this is just some of the things you need to look at. Do not how do I put it? Do not just focus on the one day. Try to look what's been happening the past few days. What can I use from the left in order to get the best setup or in order to understand the market better? That's the only way you can make it in trading. So I hope this setup helps. I just thought let me explain since somebody requested me to explain my reason for taking buys yesterday on a day when we didn't really have a bias. So I hope that helps. So today, if we can get a break above this level, then I'll consider buys. Definitely. But we just want to pay attention also on the 200 EMA because sometimes you might just want to come bounce off here, then come to the bottom side before a setup actually happens. So again, those are some of the things you just have to anticipate as you are marking out your charts. So C5, we've got a spike there. Let's see if we can scale in. What price action do we have? Okay, C5, we can add one position. We can add one more position there. Then I'm going to give you a new stop loss. We now have a new stop loss based on the current market structure on M5. Okay, I'm just executing the trades on my phone, so you guys kindly be with me. Okay, so we've got two positions running on C500. Okay, that's the only setup which we have at the moment. So C5, C1, B5, we spoke about it. B1000, we had a nice buy. I didn't share this trade yesterday because I felt like I had shared a lot of setups. So I ended up not sharing this trade. There was another late night trade. I remember we had missed much of the move, and I saw price come bounce off this level. Remember, I mentioned running a fib when your price starts to retrace. So this became a high. Price came bounced off the 32. Right on the 32, I had yesterday's high. So I saw them bounce off and give this impulsive move up. Right here is where I bought. And this trade quickly gave 100 pips. It was actually 140 pips, but I think I closed out at 100. The quickest trade. These are some of the setups we actually try to catch, but I remember I did not share this because we had literally taken trades on other assets which were actually successful. So I didn't end up sharing this, but I executed a buy, played out. What are we looking for today? Let me just remove this. So just based on the market structure or how price has been moving, we could get a bullish day because this trend has been bullish. We've broken 16,000. Can we come back and retest 16,000? Yes, we might be able to come back and retest. Can price actually totally reverse from this area? Yes, they can because we've been pushing up for a long time and there is no interaction with the Thetan EMA except at the beginning of the month. That's one thing I want you to take note. So if you're looking at your charts, these are all the things you need to take into consideration. What has been going on? When you're on your daily charts, make sure you've got period separators on your charts so that you can see, okay, this is May beginning, this is April, this is March. Have period separators on your charts and you need to understand how to use them. So on the daily period separators, they show the months. They separate the months. When you're on the 4 hour, the period separators, they separate the weeks. So this is 1 week. This is the current week. This ends on Saturday night. When you're on the H1, the period separators, they show the days. This is yesterday. This is today. And when you're on the H1 going down, they represent the day. Then H2, H3, H4, they represent the week. Then the daily, they represent the month. So these are some of the things which some people overlook, but they actually help, especially if you are day trading. So you understand, okay, for this month, we're bullish, or for this day, or for this week, we're bullish. What am I expecting going into the next week? Those are all the things you need to have on your charts, especially if you're trading full time also. So here you can notice this month we never interacted with the Thetan except on the very first few days, and we've been strongly pushing up. So from here, two things can happen, or maybe three things. Price can push up. So when the daily candle turns bullish, I will be actively looking for a buy. That's number one, because I'm just trading with the trend. Number two, price can still come and bounce off right on the 16,000 area or price line since it is a whole number. If you understand Kota's theory, that's where you apply it. Since it's a whole number, we might just come bounce off 16,000, then continue pushing up. That's the second scenario. Then the third scenario is price will actually most likely maybe retrace all the way to actually interact with the Thetan. Since we are around about mid-month now, so price might actually want to reverse or retrace, one of the two. So as long as you know those scenarios, when it happens, it makes it easier to form a setup and it makes it easier to execute a trade because you've already anticipated it. You are not gambling or trying to guess. You're just trading what price is doing. So for this, I've got those three views and I'll patiently wait. Maybe I'll just leave it on Let me actually leave it on H1 because I prefer H1 because it's easier to see where my trend is going if I'm on H1. So I'm just going to wait for price to come back above the 13 before I consider any buys. Points of interest, you might notice that we do have this demand zone right there, right on the 50 EMA. So we might get short-term buys right there. Why I'm saying short-term is because when this price gets here, remember it will be trading below the 13 EMA, meaning intraday it will be bearish. So any buy which happens below the 13 EMA is a low probability buy and it's a short-term trade until price comes above retest and then the trend changes and becomes a high probability trade. Those are some of the things you need to put on your notes as well. So I hope that helps. This is my only point of interest for today. Maybe this one below as well. We'll just see how price moves. Then going to step index. Step index, we have been waiting for them to come below or above these 13 EMA and maybe the 50 for us to get that bullish push. They're still playing around this area on the bottom, so I believe they're still shaking out some early buyers, maybe trying to take out some accounts before the trend actually confirms. So this one also, if the candlestick soon as it turns bullish, I might consider buys. Right now, we're already trading about the 13 EMA, but very close by. We've got the 200 and we are currently on the 50. So at this point, price can go either way. So I'd prefer to just wait a bit, see if I can get a better pattern which I can use before I decide to execute. So if you notice, price is still bouncing off. You see this level here, bounced off here. We still bounced off even today. So price is still sort of respecting that price there. So that's around 81.85, 81.85. So we'll just see. We're just keeping an eye on it. Then on the left-hand side, maybe safe buys will most likely happen after a structure is broken. So remember, before you buy or if you are doubting a buy, look to your left. What is on the left which is showing you that price is going up? The only thing we should show you that price is going up should be a structure getting broken, potentially retested, price continuing breaking structures like that. As soon as structure starts getting broken on your left, you then know that it's an uptrend. Right now, this is a high, lower high, right here. Until this structure was broken, we couldn't sell it because we were not sure. So price comes, it stops, pushes up, then it breaks, then it retests, which means you can now sell this. You get it. So here, if we can break this and do this, then we can buy here. You should just try to keep it as simple as that, especially if you're struggling. Just try to wait for structures to be broken, because for every good trend, price will retrace or they will give you a form of an entry for you to jump in. So we have to try by all means to just be patient for price to show us direction before we actually jump in and put our capital at risk. J10, I don't know who caught it yesterday again, gave a sweet entry, same zone which it used the day before yesterday. We had a bullish bias, but the whole day price was pushing down until we got here. Remember, for us to buy, price is to what? Break a structure to show that it's going up. So as you can see, we come up, we fail to break. Then here is where that break happens, right there, right there, right there, right there. So in this particular example, price does not retrace, it just continues pushing up. So those are the two scenarios, and we will never know whether price is going to come back and retrace, then continue, or it's just going to shoot up. That's why you see, I usually say, if you see a setup, just put one position. That one position will help your emotions. Because most of the time, if you don't put a position and you wait for a pullback and it doesn't come, you become emotional. Then you start chasing price. Maybe you want to buy it here, that time is going to give a deeper retracement. It takes you out. That's what usually happens most of the time, just talking from experience. So usually if you see a pattern form, just have one position in the trade so that if it decides to push, at least you've got a position. If it decides to retrace, maybe take you out, at least you had one position and it's a small loss, right? If it decides to retest and push up, then you can add a position or positions as the price is going. So I hope this helps somebody. And this applies to anything you trade: currencies, forex, stocks, crypto, synthetic indices. It's the same approach which you should actually use. So looking at it today, right now, it looks like we've hit yesterday's high. And based on screen time, this looks like it's a sell motion currently happening. So let's just see what's going on with the daily. Daily, you see that we have an inverted hammer right here from yesterday. I was hoping they would tap that red line you see at the top. They take out liquidity before the sell, but sometimes price will just drop. So again, this is a retracement on the daily. It's not yet a sell because price has not yet broken a level. From the daily, it's a retracement, right? So daily gives you buyers. 4 hour, you just check if you've got any order block. 4 hour also shows we were still bullish, but these two candles show us we can get a retracement back into this order block. When you jump to M15, it will most likely be a short-term sell. But if you are doubting, remember this order block was not retested, right? If you are doubting, you simply have to wait it out, see what they want to do here. If they break, then you can sell, but they might still bounce off here and respect the broken order block and still push up, going up towards that red line we have on the daily. So all this information you can see, we are doing multi-time frame analysis from what's happening to the daily to what's happening on the M15. So as long as you understand where price is going or what's happening, it becomes a bit easier to trade. So for now, I feel like we will get a short-term sell right now from current market price, uh, because from this high order block, a broken level, a retest, if we break here, we might potentially get something like this. So those trading J10, I'm not active on J10 these days. I just like analyzing it. Potentially you can get a short-term sell, but if you are doubting this sell, just wait. Let's see if they actually want to come here. Then from here, that's where we're going to decide whether we're going up or we're going down. So I think that's it for me today. Step index, I'm not sure, did I mention what we are looking for here? If we break this level, I guess this gray level on top here, which is a market structure, that's when we're going to be actively looking for buys. B1000, we're waiting for it on this gray zone and around 16,000 area to see if they're going to give us a buy. B500, we're waiting for them to break this red line on H1 for us to actually get a safer entry. They could still push up from here, but right now its structure has not been broken, which is going to make this a low probability trade. So we have to patiently wait. C1000, if we do break this red line, we might get a short-term sell, but otherwise this trend is bullish and it will most likely get to around 55.10, 55.15 before we get a nice intraday reversal. C5, we had two positions, but I mentioned I was going to give a new stop loss. That new stop loss was going to be right above this last high you see on M5. But you can still manage this trade accordingly. If you're seeing sales, then you can hold your trade. What else do I see here? I've got this fair value gap right here, right there. So price can still go above the fair value gap, or you can just put it above this last M5 zone, which you see here. That's around 46.35. If your stop loss can be on 46.35, if it's a loss, the loss will be very small and it will be very manageable. But for now, we just have two trades there. And most likely we should get around 46.10, 46.90, or maybe 46.70 if we're lucky. C3, Polish, nothing for now. So that's it from me today, guys. We have nothing much. So usually if there's nothing, try to save your capital. There will be better days. There will be better setups. Like yesterday's setups just ended up popping up towards the end of the day. And if you manage to make profit yesterday, do not lose your profits today. So always try to make sure that if I make $10 today. Tomorrow when I'm trading, I cannot lose $10 because that's hustling backwards. Tomorrow I'll only be putting $5 on the line so that I remain net profitable. If you make $100 or whatever amount you make, just split it in half uh and use the half as your risk. Or otherwise you can just use the method I say, whatever profits you make, let's say this is your profits which you've made for every trade you take. If this is your profit, you want to split it into three. Okay, so 50% of your profits, um, 50% of your profits will go towards compounding. They compound to your capital. So whatever amount your capital is, the 50%, you just add them to your capital, right? Then the remaining 50%, you want to split it into two. Once you split it into two, 25% should go to your bank. Pay yourself. After every good trade or after every profitable trade, I don't care no matter how small, pay yourself. Those bank notifications when they hit or crypto notifications when they hit, they sort of stimulate or motivate you to show up and keep doing better so that you can keep getting money into your bank. So 25% goes into your bank, pay yourself. Then the remaining 25%, this is for your rainy days. This goes to your wallets. We all know that we are human. At some point, we're going to fuck up the capital. We're going to get carried away. We're going to hold a loss for longer than we should hold. An account is going to get blown. So 25% of every trade has to go to your wallet. That's your backup so that when you blow this, you can still tap into your wallet and refund your account without stress. If you do this for every trade, trust me, after a month, after 3 months, after the whole year, you will thank yourself. So I hope this helps somebody who's struggling. And I'm wishing you guys a very safe weekend ahead. I won't do any live sessions during the weekend, but I will be sharing setups as I will be on the charts as well. So apart from that, enjoy the rest of your day. And if you guys still have questions, please do drop me the questions on Telegram, and we can just get into it. You're welcome, bro. Thank you for joining. I ended up recording this session, so I'll just drop it on YouTube soon as I'm done now. So enjoy the rest of your guys. Enjoy the rest of the day, guys. Good trading.